presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to have Tim Ord on today. Voice still a little shaky, but we're going to get through it. There it is. I mean, this market is down to, we almost hit the first circuit breaker. Almost 6-point-something% earlier today. Come back up, maybe on, you know, some short covering. I mean, the long story of this entire thing is we're not out of the woods. We're just not. You know, beyond the tariffs, which actually obviously do have an effect, and what Trump says, of course, can have effect as well. You know, you have a vast weakening of the dollar right now, strengthening of the Japanese yen as they sell off our treasury bills to get liquidity, they strengthen their yen. You know, there's some, you know, that's what can drive a lot of stuff, right? And I really want to get Teddy Keckstad on so he can enlighten us a little bit more on that. Of course, he was joined by Tommy yesterday for the morning market kickoff, so you can check our YouTube channel, Tiger Financial News Network, out. You can check out that interview that they had. But there's some significant problems, I think, that still exist. And I'm looking at my VIX calls, and I mean, your SPY's coming down even further right now. Your VIX is up 42.53, quite a swing today. Of course, we are lower, at least on the VIX, than we were earlier today, about 52.29, I believe was a high there. And so that's where I stand at, right? You know, I am not trying to really predict the price, at least for calls or puts on any equity, but the volatility is still absolutely going to be there. This is, you know, this is a big liquidity problem that I think we're experiencing, you know. Then the news comes out, which in theory can kind of alleviate some fears of illiquidity. They're increasing the debt ceiling. And that kind of makes sense, right? So I don't know if we're going to see a bunch of reissuance of short-term debt like you're kind of seeing under Yellen. Most likely, interest rates will stay somewhat elevated. The near term is just too uncertain. And even with the cooled CPI, which is nice, this is some legit deflation we're seeing, the Fed is still erring on the side of caution, and I don't blame them, because it's fully unclear what is going to happen, with these policies, number one, and then how these policies even manifest. So very hard to try to bet this, and so I don't blame them kind of taking an easy side. Additionally, something that I think demonstrates fear on the near term, you obviously have gold rallying up quite a bit. This VIX is moving right now. Gold is rallying up. I think there is a massive dash to cash that you're seeing. Give me a second. I think we're getting a call too. Tim Ord will probably be on next break. Man, what did I want to say about that? I heard the ringing on Skype and completely forgot. Long story short, you're seeing a massive kind of dash to cash right now. The fear of inflation is still there. Oh, the 30-year. You had great demand for the 30-year auction today, and I saw a lot of people online saying, like, well, this is good. Why are the equities still going down? And it's like, when you have that massive demand for something on the far term, I mean, that's a flight to duration. That means the uncertainty is still inherent in this market. I do not think that bodes well for just equities in the meantime. Now, when you're getting some major flows like this, I mean, one of the things you are starting to see is, basically what's massive short covering, where you saw yesterday, right? Now, of course, there was Trump talking about, hey, we're going to push back the tariffs, and that might cause some kind of overreaction and buying to the upside, although the conditions still aren't very good. But, that can also be used as a way to kind of short cover, if they think it's going to, push equities up. So, one way that you could play is trying to buy some, you can even scalp the calls when you're getting massive days selling off like this. Hold it for a little bit. You get absurd rips, 20% to the upside. We saw 10% of the upside in the SPY yesterday. Sell off because, believe me, the lower prices come after that, right? And I don't know. This is just such a wild market, and it's never as simple as it seems, right? You don't get these massive dump-offs. And I haven't heard many people in the den say this, but I mean, again, one of the problems, and I had been arguing with some of my friends who were trying to buy in like right here, was like, man, your relative point of reference is this. I mean, that isn't valid in my opinion. I think it was total exuberance to the upside. You're having issues with the yen, which is going to cause sell-offs in the market. You had the Treasury basis trade, which is very tough. You're seeing a lot of liquidation of Treasury, and that is destabilizing. And then that forced Trump's hand yesterday, essentially. I mean, there's a place that it could just blow up, and he had to step in and do something, right? Now, my point thinking with that is it couldn't have just been retail buying yesterday because the move was so insane, right? And of course, it's relative to what it's been trading at, blah, blah, blah. But if there were any massive institutions getting into that point, I mean, they are using everyone as exit liquidity, because I don't know why you would want to, and again, if you're holding these things on a long term, if these are long-term funds and you don't care portfolios, then probably okay time to add into some equity, at least get a little bit of exposure, But if these are more short-term things, the uncertainty is just too strong. I mean, it's getting to a point where I'm not even doing options on equities. It's just basically the VIX, and it's so absurd. That's good stuff. Post on Zero Hedge was moving the last 2 hours. Rumor out there, Fed working on a hedge fund bailout, $2 trillion. I mean, that was almost like the bailout yesterday with him saying that. Yeah, we'll see what happens. That's crazy. And they just increased the debt ceiling, which again is to be expected. There was no way they were going to be able to not do that and reissue in June. Now, again, I don't know what goes on from there, and that does resolve some fear of like longer term illiquidity in the world or just a readjustment to a lower amount, but it's pretty insane stuff. This is a wild, wild, wild market. Folks, that's right, JP. Folks, you sit right there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. Yes, there were people on the wrong side of the U.S. Treasuries in a major way. I think some of the hedge funds were leveraged very heavily to go long on cash bonds and short on futures. And, that long on cash bonds didn't really work out at some certain point. And, at a certain point, then repo rates become too high and servicing that debt becomes a massive issue. Of course, then you have the pressure from Japan selling yen to get liquidity. That causes issues. What are you looking at? Just looking at some of my, I don't know. When I'm staying in June calls for the VIX, additionally, I have one at 40 and then another group at 42.5 strikes. So, because the volatility is going to stay, people. I mean, it is absolutely going to stay. I don't know if the bailout really works. I'm concerned that's not really the case because they have consistently said we're not going to, we're not going to decrease interest rates, but I don't know. There's other ways they can add liquidity into the economy. It's weird. But, what I'll say to this as well is like, hey, there's a rumor of the 90-day pause that actually did come true. I mean, this is one of the first times you're really seeing this bizarre kind of leaking going in to the general environment, and it actually does have meaning. So who's to say? Yeah, imagine getting blown up on that kind of news. So right now, it is Thursday. We are going to go over right now to our browser. We are going to check out ord-oracle.com. That is the Ord Oracle. And the Ord Oracle is no other than Tim Ord. Tim comes on every Tuesday and Thursday. And wow, quite the movement. We have, again, some movement to the downside of the SPY. That seems to be recovering a little bit right now. You have the gold contract moving up 3.55% as people move in to some kind of really almost recessionary kind of issue. And then taking a look at the GDX, trading right now up 5.37%. How about that? Tim Ord, how are you doing?
Lots been going on lately.
Man, it has been. Let's take a look at some stuff.
Right, let's take a look at stuff. Matter of fact, we were talking on your Tuesday.
Yeah.
I was kind of in a hurry. I did get long on the market on that close, and I actually got out yesterday. We'll show you the reason why, but let's look at the bigger picture first, see where we are in the market. My phone's going off here. But anyhow, the bottom window is the 100-day average of the trend, and just this looks at usually the bigger trend. This works. I forgot how many. It's like 80% of the time, so it's a high percentage trade. And I put another line in here. We showed this chart quite a few times in the past, but just it reminds you where you are in the market. So there's a chance that we're some sort of a top, and we'll get to some sort of a bottom when this 100-day trend gets up around 1.15. That's 1 point. Well, between 0.15. Doesn't need to get to 1.2 in the 100-day trend, but if it gets up around 1.5, you're probably making an intermediate term low. If you look at here, that was kind of a high, but here it picked out the lows. So anyhow, I drew that line. So that's where we are. Basically, 100-day trends in bearish territory in a nutshell. So we like to see this thing rise over the next several weeks to get up close to 1.2 or something, close to that, suggesting intermediate term lows forming. To get that, we're going to see a lot of panic in the market. And right now, this is kind of a short-term view where the trend is. 10-day trend as of yesterday's close comes in at 1.12, which is near bullish. But the this one here is the 21-day, which is one I'm kind of really keying off of. This really picks out intermediate term lows. Last time this got in bullish territory, came in January 2024. Started an uptrend. Yeah, my opinion, to finally get near an intermediate term low, we're going to see the 21-day trend somewhere close to 1.2 or higher, and we're coming in right now at neutral is 1. So we don't really have enough panic in the market to really get this thing going longer. Intermediate terms, what the point I'm trying to make. So 10-day is backing off again today because you got a trend right now 0.54, which is not very good. So we're probably going to see some backing and filling here. But this is the chart. We got long Tuesday. We got out yesterday. The reason why we got out yesterday, the ticks closed at 651. I thought that was close enough to see, too much euphoria going up here. But we did, as we talked about the 3-gap play, in other words, you had 3 gaps down, that predicts market go back up to the first gap. That's exactly what happened yesterday. Hit the 3rd gap, stop, come back down. So where are we going to go now? I think we're starting to build a base here. This is not the final low. We're right smack in the middle of yesterday's trading range. We're close to it. So either... Well, I'm thinking eventually we're going to get down to this low right here, which is Monday's low, which is high volume. High volume lows almost always tested. And if it's tested on lighter volume and you get the trend in panic territory, like 1.2 or higher, I'll probably end up with a buy signal.
Okay.
The buy signal will go back up to this high because that's a high volume high. You're going to test that. And if that volume is tested on that high and higher volume, you're going to keep going. If it's tested on lighter volume, you're probably going to come back down again. But the trades I got going on right now, right smack in the middle of this big bar yesterday.
Yes.
Either we test this high, I get a sell signal for a downside target this low, or we go back down to this low, test this on lighter volume, give them an upside target for this high. So you got in a trading range here, and that's what markets do to build cause for the next rally up. I think we're in the process of making a bottom here. We did have enough panic in the market. If you notice, this volume's really huge compared to the previous days for it. So that's a blowout low. So this low is going to be tested. That could lead to the next buy signal, which would be this high. It's not going to keep going. It's just going to test this high. Then from there, we'll have to wait and see. So, but a little bit of patience, right in the middle of nowhere. There's no trade here. Can it go up? Yeah, I test that high. Can it go down? Yeah, I can test this low. But right now, I don't have a objective which way it's going to go. I think with the trend and tick doing what it's doing today, if we had a trend like 1.2 or higher, I think we'll test that high first. But since we got a trend coming in right now, and if it stays here over the next couple of days, especially 0.52, that's no panic. So that's no low. So that would need the market need to go down low until that trend starts to rise, whatever that is. Most likely that trend will rise right back at this level here. I always said in the past, once you get a high trend reading, I didn't put it in here, but this day right here, yesterday, no, actually it was this day before, this is Tuesday, that's when we're on the air. and that trend closed that day of 2.42. Once you get a trend reading in an area that shows panic, normally when you get around in that area again, you'll get panic again. So there's a kind of a double story here. Is this low or this low? Most likely we'll get to this low, but this vicinity, I bet you get panic again. You're going to end up with a buy signal, but it'll be a short-term buy signal.
Perfect. Tim, please stay right there, folks. We'll be right back with Tim Ward after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. Before we get to Tim Ward, I just want to say the yields are kind of blowing out again. 10-year up at 4.4%, 30-year 4.9%, 2-year declining a little bit by about 10 basis points, 3.84. This is some pretty gnarly stuff going on. And then additionally, you have your junk bonds here. Yields are coming up as well. They're selling off about 1.65% in the HYG. Tim, let's get back to what we're talking about, because you're seeing some weakness, at least to the movement to the upside that we were seeing yesterday.
Right. So, kind of in a nutshell, I've been saying panic only forms at lows. We're just finally starting to get some panic here. And to reload this market, I guess you might say, you're going to need some panic. Again, on Tuesday, which is this day right here, we had a 2.42 reading. And if you go back down into that range again, you're probably going to get another trend reading at least 1.2 or higher. Matter of fact, I got a day right here of 1.28. So you're starting to see panic trend closes in this vicinity. So give or take. So we're probably going to end up with a buy signal on a test of this low. And but test of this low gives an upside target to the previous high, which is this high. Well, that's 10% higher. So it's really a decent trade to the upside. So because this trade right here, this day right here, was 9.5% just that one day.
Right.
So we're going to actually be lower to that. So you're going to be over 10%, right? So that's what's starting to develop. Trend 1.28 on this day. This day was 2.42. If you get another one down here, 2 something, most likely we're going to end up with the trade, and it's going to be upside target. We may go through that target. I don't know, but we'll at least go back up to it. So, but that's again over a 10% trade. So that's the next setup. So, but we're in between no man's land right now, because you're not near a previous high or previous low. You're right smack in the middle. So there's nothing to do. But I think we fall back here. Is my opinion. So we'll see how that trade works out. And we're on twice a week, so if it does, we'll announce it. So,
of course, yeah.
Here's something that's developing. We said this is a gold GDX top window, and I been saying this is probably 3 drives to a top pattern. This is the same pattern. I just kind of keep updating it. And anyhow, 3 drive to top pattern, how do you identify them? Is the second top retraces at least 61.8% of the previous up leg. Well, it did. I have a Fibonacci retracement level there, those blue lines, and it retraced a little bit over 61.8%. But it has to also do on big volume. If you notice, the volume did jump, so it meets that requirement. You have a pullback on higher volume. That 61.8% retracement of the previous up leg. What happens next is another new high. If you notice, the market's really rallying here strongly, and we're going to hit to new highs up here. The next higher high will be a top. Exactly where it'll come in at, not sure, but probably around the 50 range on GDX. 3 drives at top pattern has the target to where the pattern began. So we go up 3 drives top pattern, we retrace all the way back down to 39. So that's quite a bit of volatility.
Okay.
Yeah, going forward here. That's market does this sometimes. It just knocks everybody out, the bulls and the bears.
Yes.
And so, anyhow, we're probably going to be sellers not too far distance here, because this market's going to move fast, pretty fast here. But we'll probably get in the 50s range, maybe 49 to 52. I don't know. But we'll get up there. I'll have some clues when it does. But, if you notice here, we're basically setting a new highs, intermediate term. We're above this high. But if you notice what's going on here on the advanced decline, cumulative advanced decline and cumulative up-down volume, which is this bottom, both of them are going down as this market's hitting newer higher highs. So that's a bearish divergence. In other words, it's less volume to the upside carrying the market up, and there's less advanced issues compared to declining issues carrying the market up.
Right.
So the leadership is starting to narrow, and that's what happens at tops. The advanced decline gets weaker, and the up volume compared to down volume gets weaker. So will this get below -10 when this next one, say we hit in the 50 range? Will that get below -10? It could, but we're not too far from it now. We're -2 on one and basically 0 on the other one. So we got the divergence. So I'm probably going to issue a sell signal on this. I don't know. Doesn't look like it'd be today, but
right.
Probably could it could be next week, maybe week after. Depends how the market kind of gels out here. But the next high is probably a worthwhile high, because if we get to 50, retrace all the way to 39, that's what, over 20% retracement. And another thing, 3 drives of top pattern are not long-term topping patterns. They're timeouts and uptrends. And that kind of confirms from other studies I do on GDX. I got GDX in an uptrend, at least at the very earliest, late or November of this year, but probably long. So this is just a shakeout to the upside.
Right.
So I think, in general, I think GDX actually could rally to 2027. I may change that projection, but right now, this is a good trade opportunity, I guess you might say, and it's setting up pretty well. Here's a longer-term chart. So this is a 50-day average of the up-down volume. So it's like a month and a half of data. So this may not get to a sell signal. It may stay, above zero. It ain't below zero on this one. It's a sell signal. But this is more intermediate term trading. So we just may pull back to 39. This indicator remains on a buy signal. But I think what we're going to try to pick out is probably something like this area right here, where this indicator remains strong, and it's just a pullback in an uptrend. So that's what I think is happening. So I got quite a few gold stocks. I'm trying to look for some that I could sell and buy back later. And so what else charts I got?
Well, I want to say too, you might be looking to be a seller somewhat soon, not right now in particular. But if people get your newsletter, they can get that kind of, I know we do Tuesdays and Thursdays, but there's always developments going on in the market. And definitely recommend checking out that newsletter as well, because I'm sure you'll be updating it like that too. So
yeah. I put out right before that buy signal I got on Tuesday. I sent out a email before the close. Got to take the closing price, and says if these conditions happen, I'm long the market. Then yesterday I put another email out. If the ticker readings close anywhere near plus 800, they close at 651. I'll be a seller, and that's what I did. So now this trade here, I'll be announcing it. So
okay, do you have any more charts?
No more charts. If you want to talk to me, we can have questions. I can answer them.
Yeah, well, hang on right there, folks. If you have any questions, ask me in the den or the YouTube. Tim, hang on right there. If we don't have anything, we can wrap it up, but it'd be awesome to get some exposure for that.
All right, I'll hold on.
Folks, we'll be right back. Ask your questions during the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. We're joined right now by Tim Ord. I had you guys send in some questions over the break. One thing I want to say before we bring him back on, we're going to talk about China as well to wrap up the show, just myself after Tim leaves. Some pretty big developments with China admitting to being responsible for hacking our infrastructure and then possible delistment of Chinese companies. So Tim, we actually did have a few questions.
All right.
First one is going to be, do you cover bonds at all?
No, I got an indicator that I do an RSI on the bond or equity bond ratio, but other than that, no.
Okay.
This is you can branch off to so many directions in the market. You're just way so I kind of specialize in two markets, and that's why I focus on. So
totally understand that.
All right.
And then, so additionally, I guess one of the viewers, one of our tigers, had seen what's referred to as a death cross on the SPX. I don't know if you saw that intraday. I know we were looking at a longer term picture.
Was that 200-day thing going on?
I believe so, yeah.
Yeah, I don't know. It's kind of old technology. I'll put it that way. It's in their books, but do I have a comment about it?
Yeah.
Just don't look at it. Don't pay attention to it. And stuff I do, it seems to work better than that. So it's kind of a lagging indicator, too, because it's like a 200-day thing. So, but no comment. It's too slow for me.
Okay. And then if you have any thoughts, and this could also be next show, you had a question about Goro and then TFPM. That might be better for next show as well, so you can kind of look at equity charts if you want. And again, guys, check out the Ord Oracle. I mean, the newsletter's good. So
yeah, I wanted to talk about this chart. I got it up again. The reason why this is sometimes you put so much information on the chart, you lose focus of what's going on.
Totally.
And I'm just trying to clarify what this 3 drives to the top pattern. But anyhow, this pattern, this little high here is, drive number 1. This is a second high right here. We haven't seen the third high yet. But if you can see the strength coming up, going into the third high. And again, the pullback was 61.8% retracement. It did a little bit more than that. It did have an increase in volume that nails up the 3 drives to the top pattern. So the only thing is complete this pattern to third high. Okay. And so we're hitting a higher high right now. We'll probably get close to 50 range, but this is, but we're going to go up and we're going to come back down and come a crash mode. And that's the way the equity market may do something like that similar, but it's just a big shakeout of an uptrend. So once we get down to 39 range, you may go a little bit below, maybe hit 38, but in this vicinity, then it should form another bottom and start going up. And the indicator is going to help pick that low. It would be this one here.
Okay.
Will this one get below -10? I probably say it probably will, because the market's rallying here real strongly, and both those indicators are just heading down. So we're probably, most likely, I think, we'll get a reading below -10 on both these indicators, and that'll give a sell signal. Then once it turns around, which they will, because that's how these indicators are designed. they're designed to follow the market. So they'll come right back up above -10. So that'll give us a big helping hand. If the 39 is going to be a bottom, these indicators should start going up in that vicinity. So I wanted to point how all this points out. So don't want to. Anyhow, this is. It's technical analysis. Sometimes if you're not familiar with it, you get overwhelmed by the statistics actually you can put on it. Totally. But it's pretty simple. But far as the equity market, it's all about panic. If you don't got panic, you don't have a bottom. And even though we didn't get panic all the way from that top we had back, February 19th, all the way down, I misconstrued that decline because we didn't get panic until just recently. Yeah. But yeah, we're back on track. So I bet if the S&Ps do pull back here over the next several days or next week or week after, and we get panic, I'm going along again. As far as that GORO, yeah, I'm thinking that's the 3 drives at top pattern 2, and we're going to go up another higher high on the recent. If you look at that pattern, we had 2 highs already. And we did have a retracement off the second high, over 61.8% retracement. That looks similar to this pattern that we got on GDX here. If you look at the current setup on GORO, yep, it looks similar to this. And we don't have the rally yet, but if it does rally, we'll probably have a third top. And that would imply a pullback down to his first low. So I think GORO will pretty much mirror what GDX will do. Sure. That's how my opinion. So that's the one I'm thinking I may sell. I don't have that chart right in front of me, but that pattern similar to GDX pattern. If we do get that third top on that gold stock, I may be a seller, then buy back around that first gap. So okay, that's my thought on that. Well, and then additionally, I just want to add again, check out the Oracle guys. He has his stuff in there. Single issue, you can even just check it out, right? I mean, $7.99 USD. That's a huge deal. The last question as well, and this is kind of just a quick one. Particularly I think the answer is all, but what classes of gold equities do you like looking at? Big miners, juniors? I know you were saying during, potential face rip rallies in miners, the juniors are great because they really just get a ton of equity flowing in. Yeah. But you like ETFs, brokers, anything like that? No, actually, I just look at the pattern where, as long as it's a gold stock, I don't care if it's, they're digging holes or not. It's just whatever the pattern. I look at volume studies and retracements and stuff like that, and I look, for the monthly Bollinger Band turning up on high volume. And I don't care if it's, what kind of a gold stock it is, as long as it's a gold stock. So I don't have a preference, I guess. Just depends on me, just how the pattern is forming. And so there's a lot of patterns out there. Some are not strong at all. Some are strong. So I try to pick out the strongest ones. So and GORO, of all the ones I looked at, that's one of the strongest. Actually, from all the goals, which I look at a lot of them, I probably got about 100 I look at, but not every day. I keep a list of 100 I like. I'll put it that way, and I'll try to pick the best ones out of that 100, and the ones and that gets narrowed down to about 10 stocks. And then of those 10, I really watch pretty closely. Sure. And GORO is one of those. So, my opinion, over the next, I think. The gold market, I think we got at least a couple of years. We'll have some timeouts and uptrends like what's currently going on in GDX, but I think we actually got a couple of years. Some of these got a lot of the ones I pick, I bet it'll be 10-1 to the upside. We'll see how it turns to be true or not, but yeah, that's my prediction. Maybe better. So we'll see. Awesome deal. So, well, Tim, thank you so much. I think we'll see you Tuesday, guys. Check out the Ord Oracle newsletter. Go to ord-oracle.com. Tim, enlightening as always. Thank you so much. See you next Tuesday. Thanks a lot. Take care, Tim. Folks, you stay right there. We'll be right back. There's a lot for us to talk about in a short time.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
What's going on, everyone? Welcome back. We just had Tim Ord on of the Ord Oracle. Check out our interview on our YouTube channel, Tiger Financial News Network. At the end of the day, we're going to have that up for you. Of course, our producer is hard at work doing so. Okay, so some stuff that just broke. I think this is short covering in a way because I don't know why you'd want to ham fist into a bunch of equities right now. Listen, the conditions are still bad. Things just broke down in a way with China that I'm not sure people are fully digesting right now. Of course, you have this information. They're going to get SEC chair delisting Chinese shares. That, of course, is a problem. Taking a look at BABA. I think the question is, well, do the options go away? Yeah, if these get delisted, I'm nearly positive those go away. I'm surprised this isn't getting sold off more, but obviously this is a massive leg from 107 down to 101. I don't know why that's not really registering. It's very weird. So then additionally, they came out and they said that they're responsible for all of the hacks that we accuse them of. Salt Typhoon, which is one of the most profound ones. I mean, that's in our entire just comms infrastructure. That's the thing too, when people are talking about, using Signal in the government, that is actually something that the FBI and the DOD greenlit. Because the problem that exists is that if you were communicating via iMessage to someone with Android, that is compromised due to Salt Typhoon. It's not, basically they're warning against doing that, right? Because the encryption isn't as good. Now, iMessage to iMessage is relatively encrypted, but of course you have massive risk exposure with Apple via Foxconn, and then also the feds forced them to put a backdoor in after the San Bernardino shooter. So these are some major problems. We saw that with the Israelis who put Pegasus on iPhones. This is a major thing. That is not China capitulating at all, admitting to that. That is them saying, hey, you can't cozy up to us any longer because we just admitted we screwed your stuff up. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the Morning Market Kickoff. Take care.